What up traders, what up investors, Ken here from Dyslexic Investor, and what we're going to be looking at today is some Robinhood data, basically that uses Robinhood that tracks basically the amount of ownership of certain stocks, and we're going to be looking at the past week, the amount of changes with some kind of a cutting through the data, because we don't want to look at really at penny stocks, but we're going to be looking at some of the top 10 stocks that have gained popularity in the last week. We'll do a deep dive on the overall charts and we'll just break it down from there. All right, let's go and jump to the charts now. All right, so the very first stock that we're going to be looking at is ADT. Of course, this went from about 25,000 people owning this to about 42, so that was a pretty significant increase there of ownership. And then just the past week, again, they did have a huge earnings announcement. Google's potentially deal with them. They had, again, jumped on earnings as well. Looking at the chart here, breaking down the technicals, we're looking for some potential support around the 1095 on the daily side. If you're a little bit more long-term, we can do a breakdown here on a fib retracement on the weekly side. So we're doing the swing high to swing low. That basically comes to initial support around $10.92. That's kind of, again, on the daily and weekly side, basically the first initial support, and then to the downside potentially to $9.32. Really would love to see, again, to the upside to kind of break above that 1297 level to see that momentum going higher. Again, momentum's through the roof. Everything is going gangbusters. But again, since the earnings announcements and then the deal with Google, this could just kind of trade like Fit. So if you don't remember what Fitbit is, this kind of just been, once it had its earnings announcement, it just kind of jobbled around within a very tight range until the deal can come to closure or can get approved by different countries that wanted to get in and out of it. Especially Google has to do a lot of work because it has literally a reach in every country in the world, so they have to really abide by the laws and things like that. The next stock is going to be the CHGG. The CHGG is actually one of the holdings that we've had as well. So that went from about 15,000 to about 20-ish thousand here holdings just in the past week. So that's a pretty significant change as well. Of course, they had earnings about last week. Really had a nice jump higher, made a huge gap up, and now it's kind of holding a gap, potentially just trading sideways here, kind of seeing if we can get those moving averages slightly higher. Again, since this one has been pretty much in a huge uptrend due to the overall pandemic and schools and different various things like that, we wanted to kind of look at a larger time frame, so we can go to do, again, another previous swing high to swing low here on the Fibonacci retracements on the weekly side, and you see that 2618 is basically around the $84.35. So we can see that we can potentially see this kind of resting up here, potentially seeing some more increases if we can really get things going. So let's get away this Fibonacci retracement, and then we're going to be jumping into this one here. So that's also the 2618 on this chart, and that's around 8632. Next potential upside again is around 105. Again, that is pretty far away, but again, 20 bucks, anything can happen. Especially with the changing climate in the sense of the overall market, schools, universities. This could be a potential larger mover without a doubt. To the downside, we're really going to be looking for the 21 for support around $77 to $78. So you can see that multiple times it has come down, hit that 21, even significantly hitting the 34. So this is the lovely opportunity if you're more intermediate to a little bit slightly longer meaning anywhere from a couple weeks to maybe a month or two. You really want to start buying it in between the 21 and 34. That's the strategy that we use here at the Dyslexic Investor Club. Again, speaking of the Dyslexic Investor Club, please check down below. We have the new join button. You can join different various levels of memberships. If you're interested in just doing live streams, that's great. If you're interested in getting more content on the weekends and things like that, there's also plans for you there. So definitely check that out. Greatly appreciate it. All right, let's go ahead and jump to the next one. So we just did a recent video about this as well. Silver, this is SLV, the ETF that has been really going gangbusters, jumping from 25,000 ownership to about 33,000 ownership just in a very short period of time. Again, just like in the video before, we're looking for some overhead resistance around 29.40. But with these multiple gap ups, really high RSI and volume zone oscillator just climbing, potentially looking for some potential slowdown, because again, this has just been literally running up like a rocket ship, and I think it's just kind of trying to play catch up to gold, because gold made an all-time high and silver feels a little bit left behind and feels left out of the party, and they kind of want to make a run for it. Looking here on the weekly side, you can kind of see it has run up substantially. It doesn't go into complete understanding until you see it on a monthly chart. So this is a monthly chart for 20 years. So each of these candles is a month, and it goes back 20 years. Seeing that high around 48, can that happen again? I'm not going to tell it no, but this has been a pretty large move, and even though we can see it slowing down, I think that this trend is really intact, and it's really looking for some continuous upside potentially. Really, again, looking for that overhead resistance around 29.40. Again, it can cut right through it just like it did at the 217 here at 19-20 bucks. But I'm not going to be trying to project this one out. This is going to be a very difficult one because it's going to be completely tied to JPOW printing money. Next one is going to be DDOG. So DDOG is somewhat of a newer stock. This one has been performing very well as well, but ever since a lot of like DDOG, Twilio, some of these other internet cloud-based companies, I think just had too much of a run-up into earnings. So this might be one that people are just kind of a little skeptical on, and just maybe not just going out full throttle, because they just had earnings basically this last night, and basically in trading, it's trading around $82. So $82 basically kind of comes in where the 55 exponential moving average is coming into, really breaking through those parabolic SARs, potentially looking for, again, I don't want to catch a falling knife, especially if it comes out super down. If it's a large red candle, I don't want to step in front of the freight train, but looking for potential consolidation around the 55, which is the white line here, dotted line, potentially kind of trading here and between the 50 simple moving average, potentially to try to build a base. We'll see probably the RSI kind of come down substantially today, and really see on how this plays out over the next week or so to see if there's a potential adding to a position or starting a new position in DDOG. Next is SE. This, of course, C Limited. This thing has been gangbusters as well. We talked about this. We wanted to actually buy in around I think it was like about a $1.10 here, because we saw that squeeze indicating here, and it literally fired. But guess what? That Fibonacci retracement, it failed here at the 147 like we suggested, at the 1618. It had some movement up here, potentially the 127. Wanted to maybe look at it again, but it was just moving too much. Then it had another gap up, but now kind of failing here at the 1618 at $147, and now kind of coming down, trading an after hours trading around 133. So we're looking basically in around the 5 and 8 exponential moving average. For this one, the support is really going to come in basically at the previous high here at around 130, and then more downside support between the 122 to 123, and upside potential. Again, really need a break above that 147 if you really want to see that thing run, and then potentially to 175 as well. But again, I think there's a lot of headwinds with a lot of Chinese-based companies, so be very mindful of that on the fundamental side of things. But this one still looks fairly strong, unless we can get a more larger downticks that would be a nice adding to that position. Another stock that we saw a pretty significant movement in is basically WDC, which is, again, that's the Western Digital Company. Went from 10 to 13. I think this was more of an earnings play, and a lot of people, I think, were trying to play on the coattails of a lot of other semiconductors, hardware manufacturers, chipset folks, and I think it just didn't do well, and it just didn't report very well. It really came crashing down, basically trading around 43 all the way down to around 37, basically hitting these potential lows that we saw way back in March and April. Is this a support level? I'm not sure. I'm not going to be buying it straight after an earnings downgrade like this. So this is basically kind of very similar to Intel. So they had that huge earnings drop. Took multiple days to recover and kind of see how it played out. So let's go back to WDC, and we can kind of do that Fibonacci retracement stuff regarding the extensions to kind of see on how this potentially could play out. Initially, that support here at around $39 to $40 has failed. Could potentially kind of start building a bottom here. That would be an aggressive bottom to kind of come back up to 40, or we can slowly float back down to 32 potentially, and then start building a base there. Again, we'll have to kind of wait and see, but these are some of the moving averages or the Fibonacci retracements to see, because again, there's a lot of damage I've done here. The 5 and 8 have crushed aggressively through the 21, so that momentum is really strong to the downside, and the squeeze did fire short, so we could see again 3, 4, 5 days of a very aggressive down candle. So again, I'm not going to be the one stepping in front of the freight train to catch this one falling. Another stock that we saw a pretty substantial amount of movement is GSX, from 11,000 ownership to around 17,000, and this one is also in a very, very, very tight trading range. So a lot of these stocks that we've been following have been in very tight trading range. Drawing a box here to kind of isolate what we're looking at here. This one's interesting because it already had earnings, and it did kind of come off a little bit, but it stayed in the box. Potentially looking to see how this plays out. Again, looking for a lot of overhead pressure around the 41, and then really a lot around 43, because we're seeing that's the top end of the box here. Looking for, if we can start breaking above the 41.81 and above 43, we could see 44, 45 to the upside. And if it starts breaking lower, you can see the downward support basically around $40 or 39.83 to be politically correct. To the downside, if it starts breaking below that, we could see some potential downside to around 37.85 as well there. So be mindful. This is going to be very much a trade that you can put on right now, actually, but just be cautious of those alerts there if you have a stop loss or a limit sell at these certain levels. Next one that everyone probably already knows is the Etsy. Etsy went from 25,000 people owning it to around 32. Of course, they also had earnings as well. Even though they had great numbers, again, it ran up too much into earnings, being super aggressive. Again, folks are just really just buying, even though there is some limitations on earnings in the sense of like, hey, a company can only grow so much, and there is some slight connection between what the company makes and revenue to the stock price. So I think sometimes get disconnected from that. So you kind of saw that again with Tesla, when everyone thought that Tesla's going to go to $2,000 or $3,000. I'm like, well, Tesla has to sell like literally like 500,000 cars this quarter to get those numbers. So that being said, just be super mindful of that. There's a lot of optimism out there, which I love. This is great, but just be super mindful of like, hey, take a step back. Well, again, the stock market is an emotional beast at times, and humans are really controlling the machines. They're controlling their trades. Their retail traders there's a lot of emotions in it. So emotions of like, oh, Etsy's going to be doing great. So the run up into Etsy was fantastic. So if you played and got out right before earnings, you did fantastic. Even though that the earnings call was great, it still kind of dipped lower. The trend is still very much intact it just hit the 5 EMA on the daily side. Potentially can come back down to around the 120 level for initial support, but really looking for some overhead pressure around 145 for Etsy. So this is a great looking chart. Momentum still fairly strong, but since earning has passed, we could see some consolidation, maybe some driving lower, and potentially building a base for the next leg higher. Just be mindful of those downside supports if things can get a little sour. Next one is actually TDOC. So TDOC is also another company that was in the news that they're acquiring and merging with another company, basically going from 22,000 people enjoying and starting out the week with this stock to around 32.3 basically at the end of the week. Even though this merger and acquisition looks really good on paper, but for some reason the folks on Wall Street and the traders really spoke aggressively to the downside, which I can find kind of strange. But again, this is usually when some things, the market can be irrational for a very short period of time, but in the long term it usually is rational. In the short term, which most of us are traders, in the short term, meaning a couple days, minutes, hours, weeks, it can be not irrational, so irrational. So basically, this is what we saw here. Potentially some downside support again, right around the 50-day. 50-day is known as basically the more aggressive hedge funds love the 50-day here, and then you have the long-term value funds or the larger term endowments, the larger term. Like longer term, I mean like the super large, like literally $500 billion funds that are trading these. They need to start buying around the 200-day. We're seeing a astronomical amount of volume come in just the last 2 days. So this could be, again, potentially some buying opportunity here. That being said, this will be more of a longer term hold, since this, again, on the weekly side has been performing very well. Potential downside on the weekly side is initially around 200, and then initial support again would be around 185 on the weekly side on the support. And then same here on the daily, initially around 200, and then down all the way to 152 is the 200 EMA on the daily side. That being said, we can do the previous swing high, and if we calculate this as the low here, we are potentially looking to kind of break above that 21, which is around $220 to around the 226 level. That's going to be the 50% retracement. We want to really break above that. We don't want to do a dead cat bounce, which is basically you come down, slam the floor, and you pop up a little bit, but then you fail sometimes at this level here or the 50% retracement, and then come straight back down. Would love to see it back up to around 232 or even higher to see around the 78.6 percentile move there. And last but not least, we have Net. So this is Cloudflare, of course, another company that had a strong earnings, but kind of flopped on the overall. Again, huge run up into earnings. So again, the expectations were met, but it wasn't met on the full understanding of, hey, we grew our revenue. We're really expanding. We're taking market share. Blah blah blah. But it didn't. I think people were hoping for a lot higher prices to around $44.75. Initially stalling out here at the previous high. This could be an interesting opportunity to potentially add some to the position if we can get down back to around the $40 level. If you want to start trading this, because again, we've seen a lot of reversion to around the 21 and 34 here in this stock. This whole run up, basically, it's been a very choppy stock. It's not been like an Apple where it's literally been just guiding up, but looking for some support around the 39 to the downside, 38 to 39, and potentially even down to 37. And then upside, we need to start breaking through that 42 to get to that 45 level. Again, guys, thank you so much for watching. Please don't forget to like and subscribe, and I greatly appreciate anyone who is joining the fantastic membership button here on the Dyslexic Investor button. That's the subscribe button. Again, guys, definitely check out the Discord. Greatly appreciate it, guys. Catch you guys on the flip side. Peace.